Hello, Jeff Tomlinson here, your agent in Northern Utah to help you with all of your real estate needs. I'm so glad you have a second to join me in this video. And the reason I put this video together is because I've been seeing some stuff coming up over the last couple of months or so now. Because I get a lot of buyers calling me about our listings and want to try to get into the homes and they're tired of renting and stuff. So what we do is we look at their situation, analyze it, and determine what possibilities they might have based upon their current income, credit scores, and of course the economics and what's going on in the housing market. And what I've seen lately is that we're at a point where I think we might have peaked out in our market, because a lot of buyers aren't going to be able to qualify for homes, what we're seeing, just because the interest rates are too high and prices are too high, and they're just saying, I'm done, I can't do anything more. And we feel really bad because it really is that situation where there's nothing that we can do and nothing they can do. And because of that, I put together the slideshow. I want you to look at it, watch it, and see if it's not true, what I'm seeing. So I hope you enjoy it. Okay, let's look at the facts. January of 2022, interest rates were at 2.8% to 3% depending upon your credit. Now in May of the same year, interest rates are 5 to 5.3% and climbing. How higher interest rates have impacted buyers' purchasing power. Here's an example. Say that somebody's purchasing power was $400,000 with an interest rate of 3% and a term of 30 years. Let's look at the monthly payment minus any taxes and insurance. That would be equal to $1,686. Now, let's use the same scenario, same purchase price, same term. However, let's change it to what the current interest rate is of 5%. Their payment now would be $2,147. So, if we look at this from just an interest perspective, the monthly increase is $461, based upon an annual increase of $5,532 for a full term increase of $165,000. That's how much more a person's going to pay for a home with that increased interest rate up to 5% versus the 3% that we had at the beginning of the year. The decreased purchasing power without changing the monthly 3% payment. So we'll keep the interest rate as if it were at the 3% in this scenario on the payment of $1,686. Now let's change that to the interest rate at 5%. Now that same person can purchase a home for $317,000. The decline in purchasing power has been reduced by $82,000 or 20%. What is the mean price of a home in Utah? Well, according to Utah Real Estate, as of March 2020, the median sold price of a home in Weber and Davis County is $580,000. According to the Department of Numbers, the average household income of a resident in Utah is nearly $76,000. Based upon current income levels, the average resident of Utah can afford a home value of $518,000. How do we figure this out? Well, let's take the annual income, divide that by 12, which is equal to $63,15, or that's a monthly gross income, and 45% debt to income ratio as required by lenders of the maximum amount would be $2,782. Minus any taxes and insurance and other debt, that person can now purchase of a home of $518,000. These facts expose a deficiency of income for an average Utahns based upon current home prices. With a median price of $580,000, the average Utah home income of nearly $76,000 creates an averaging purchase price of $518,000 or a deficiency between the $580,000 is nearly $62,000, meaning the person can't buy the home for that. So according to these statistics, most residents are not going to be able to purchase a typical home. What is the possible solutions to this dilemma? There will be a division or decrease spread from higher to income buyers to lower income buyers. These, as I see it, are the possible solutions. We increase income by getting another job, adding additional incomes, i.e. family members, to the loan, or possibly maybe bringing back a 40-year loans. Home prices will begin to decline until we reach an equilibrium point to match buyers' income with sellers' prices. The question is, should I wait to buy a home as prices decline, or should I buy now? And here's the dilemma: market values, buyer's income versus interest rates. This will be the ultimate decision buyers will have to make. Wow, isn't that crazy? So there's going to have to be some changes in our market based upon those statistics. Numbers pretty much don't lie, right? So I hope you enjoyed that, found it valuable, and then once again, join me on my channel. There's a lot, I think, great information out there put together based upon real life situations and what's happening. And I'm always here to help you guys in whatever you might need. So subscribe to my YouTube channel, hit me up with text, email, whatever works for you, and we'll do all that we can to help you in your situation. Thanks, and hope you guys have an awesome day.